Pretty soon. 2 minutes. All right. So very excited for this panel because we were going to discuss what the next wave of generation of crypto projects is. And for those who know me, I love to invest in apps versus infrastructure. So I think we're going to have a really exciting discussion. But before I get started, why don't we do some intros? Alex, why don't you start first?
Yeah, sure. Hey, guys. My name is Alex. I'm the managing partner and co-founder of Hack VC. We're an early stage crypto fund. We do, unfortunately, focus on infrastructure. Sorry, Jason. I've been a crypto VC for about a decade. I started a couple crypto funds and practices before this, mostly Silicon Valley and Asia over the years. Yeah, I've been doing this for about 10 years. So.
Awesome. My name is Veradittakit. I'm a managing partner at Pantera Capital. Pantera Capital is one of the earliest investors in cryptocurrency and blockchain. We started in the space about 10 years ago. That's when I got into the space. We do quite a few things. I mean, we started off on the infrastructure side of things, but we do, again, both equity, tokens, infrastructure applications, seed all the way up to Series B. And, Asia and APAC has been a huge focus for us. We've done, again, 40% of our investments outside the US, so we're really excited to be in the region again.
Awesome. I'm Joey Krug. I'm one of the partners at Founders Fund. We look for really big 0 to 1 companies that are, basically generational founders. So if that's you, I'd love to talk.
Min?
Hi, everyone. I'm Min, and I run a fund called Ethereal Ventures, which is a global investment firm focused on early stage crypto. And it was founded in 2021 by the former investment team of Consensus. I'm actually Singaporean and just moved back recently, so super excited to meet all the builders of Asia this week.
Awesome. And my name is Jason. I am the co-founder of an angel fund called Tangent. And I'm really excited to dive into this today because there's been a lot of new things happening in crypto. I think one of the things that's been catching a lot of people's attention is this new social media app called Friendtech. For those who are not aware, it's basically an app where you can buy shares in other people, and it's really taken off. But what's interesting to me is we've never really seen a lot of social apps take off in crypto before. So I'm curious what the gigabrains here think about applying social applications on a blockchain.
I feel like either me or you could start. Look, I can start it. So I'll speak for myself. I think Alex is also invested. We invested pretty early on in DeSo.
Oh, nice.
Again, we were early on in Nader's last company, and we think DeSo is an interesting project. Started off with BitCloud, and so I think if you're able to sort of get folks into crypto in two ways, people want to go out there, people want to speculate and do things that they haven't done beforehand, and then of course being able to sort of obfuscate the crypto component, have an easy way to sort of get onboarded and be able to sort of experience crypto with maybe not as much sort of crypto in the forefront, I think is really interesting. So again, I think Friend.tech has done a pretty good job and of just kind of getting sort of like an early adopter movement. And I think there's a lot of potential in general for social to be disrupted. Again, there's the blockchain in terms of just like permanent storage, sort of like censorship resistance. I think there's sort of an ability to create an economic layer around everything where people can actually monetize the content and be able to get a better user experience through sort of incentivization and content moderation, things like that, and then be able to sort of expand the ability to monetize with something like NFTs, being able to sort of create more loyalty. And then of course I think there's potential around sort of taking the data that gets accumulated and then being able to create your own sort of identity. And of course, that goes into many different other types of applications. So I really do think that there's a lot of disruption to be had, but it really takes the right entrepreneur to be able to find a wedge to be able to get user adoption like Friend.tech, but then be able to sort of innovate in a way where crypto becomes maybe not at the forefront, but it enables things you can't do beforehand.
I'm curious what you think as well, Joey, because before Founders Fund, you were at Pantera, and before Pantera, you were known for starting Augur, which is the first predictions market. It's one of the very few apps back in those days that has a social element as well, and it's not just DeFi. So how do you see kind of social and crypto playing out?
Yeah, I'll be straight up on it. I don't really understand social that well. I think if you look at what what Friendtech has done, probably to me the most interesting thing about it is just like the UI UX around it, where they basically built this progressive web app where you can add it to your home screen. I think there'll be more of that going forward, especially like given the regulatory environment around Apple. And so I think that's something that's going to be bigger in the future. If you look at the very original iPhone, Steve Jobs actually didn't want an app store. He just thought everything would be web apps. The Web 2.0 stack was just too early for that, but I think it's actually at a point where that sort of thing is feasible. You can have notifications now as a web app. You don't have to be native on the App Store. I think that's probably the most interesting thing about it to me. And then in terms of social and crypto more broadly, I think the main thing that's needed for it to really take off is like some kind of big 0 to 1 difference versus the existing social media platforms. I'm not sure anybody's really quite delivered on that yet, and I also like don't know exactly what that would look like. But those are my kind of high-level views.
Got it. And Alex, I'm curious what you think about investing in infrastructure versus apps as well, because you mentioned earlier that a lot of your focus is on infrastructure, but it seems like lately there has been a lot more applications being funded. So I'm curious, like, where you think value accrues between the two and how you spend your time?
Yeah, totally. I'm going to go back to the Friendtech thing too, though, because it's a great concept. I think it's an incredibly fascinating application. You guys should all try it if you haven't. Yeah, I think at least the user experience of how they sort of cleverly did onboarding in a way that got around having to deal with the Apple stores, just like very onerous like iOS policies against crypto companies was very clever. Yeah, so we were early investors in DeSa and still are. And I think the concept of like crypto social is really fascinating because what happened with social media companies, Facebook and Twitter and everything, a few decades ago is they were sort of Trojan horses. They came in and they created these networks for people to talk to each other and eventually for sort of fans to interact with their followers, or like followers to interact with leaders and creators and all this sort of stuff. And then in a sort of sneaky way, in the back door, they also bundled in, they basically completely intermediated the way that like fans interact with their like leaders and creators. And they did everything that they could to make it hard for you to understand who your followers are and how to monetize them directly. And this was great for social media companies because then they could control the whole thing. They can monetize you with clicks or impressions or anything else they do, and they could sort of disempower the legion of fans. And I think the opportunity for Friendtech and DeSo and all this stuff, and this is the value of blockchain, is you could sort of unbundle this again, and you could create like a whole monetization layer to the creator economy, which is really big, And I think like OnlyFans is a great example of this. Like you don't need to have this whole like social network and text, you could just like have this layer where people interact with the creators, with their fans.
YouTube takes 35% fees. I mean, that's kind of like how vulturous these marketplaces are. So yeah.
Totally. I think TikTok is the absolute worst too. It's you get like 1% or less if you're a creator of what TikTok makes. The problem is like there's like a ton of like infrastructure. This is to your question. There's like a ton that has to get built before the vision and reality. So, BitClout kind of had like hundreds of thousands or millions of users at one point, I think, allegedly at least.
Yeah.
And it had like a New Yorker article. That's pretty, in the US, like when you get a New Yorker article, like you really made it in like pop culture. Like it took Mark Andreessen and like Peter Thiel like 10 to 20 years before of like celebrity and notoriety before they got New Yorker articles. So BitClout got like a New Yorker article 3 months in, everyone was excited about it. But you bought these creator coins, then like there wasn't really anything to do with them, and they were just like Dogecoin, meme coin kind of things, right? And so Friendtech added this thing where it's like, well, you can be part of my group chat, but I don't know how valuable being part of a group chat is. I don't know if that's worth thousands of dollars for like per coin or something. So I think there's a lot that needs to be built, a lot of infrastructure. It's like token gated communities and stuff like that, and putting in like cash flows and royalties and like true like economics, like unit economics that creators make from their fans into these tokens and coins before we're ready. And it's just like a lot of work to get done. And that's also kind of my infrastructure thesis. Like there's just a lot of boring kind of stuff that needs to be built.
Got it. And curious, Min, what do you think about investing in infrastructure versus applications as well?
Yeah, I think this stuff happens in waves, really. Even in the early days of Consensus, when it was pretty near impossible to build an application, I think Consensus incubated a lot of very early stage startups, really just like, I think, prototypes and experiments just to test like what the limits of the infrastructure was, so you can actually work backwards to see what needs to be built. I think we've had a few great years of funding a lot of infrastructure projects, and especially on the ZK side, on the scaling side, which is at the level now we have a TPS that we haven't seen before. And previously, I think a lot of the scaling ability of on-chain was limited to trading, right? But we look at the real world, you have this number of transactions for trading, and it's like 10, 20x for payments, and a lot more for like social and content. So we're going up the chain, and it's definitely an evolution. At least from our perspective, we're pretty excited at this point to sort of harvest a lot of the seedlings that were planted and have application developers actually experiment and provide feedback and iterate. So what middleware is missing, what dev tools are missing, and it's going to be pretty janky. The UX is not going to be great. There's probably going to be a lot of improvements we can make on security, but I think it's very difficult for us to actually get to Web3 apps unless we start intermingling between applications and infrastructure.
And I think one of the most humbling things about investing in crypto is also the table selection as well. There's so many different verticals that are completely different from each other. So I'm curious, like across all these verticals that we have now, be it DeFi, NFTs, or decentralized physical infrastructure like Filecoin and so on, what are some verticals that you guys are excited about that maybe not too many people are looking at yet?
I'm happy to start. On our end, we really look for like who we think are the strongest founders, and then they sort of pitch at their vision, and we decide whether we agree with that vision of the world or not. So not too opinionated on like different areas. I see there are some areas that are interesting that we're looking at, right? Like we do a lot of infrastructure investing as well. If you look at kind of the zero knowledge proof space, there's a lot of people recently trying to basically provide storage proofs of either like historical data on chain, which you could use for like bridging. You could also use it for like, say you're a DeFi lending protocol and you want to calculate the historical volatility of some asset to set risk parameters. You could do this in a trustless way versus having to use like a centralized oracle. Stuff like that is like theoretically interesting. I do think there will eventually be some intersection between crypto and AI, but I think the kind of current wave of projects, for the most part, and if anyone has a contrarian view on it, would love them to talk to me. But so far, a lot of what I've seen doesn't make a ton of sense. People trying to do kind of distributed GPU compute, and yes, per like unit of compute time when you're actually running the model, it's cheaper. But then when you add in the comms overhead of a distributed network, it actually ends up being many times more expensive to run compute in such a setting. I think there are ways to solve some of these problems, and have some ideas on that if anyone wants to jam on that. So that's an area that I find interesting. And then I think the last one is the DeFi space kind of writ large sort of feels like in a trough of disillusionment right now. And I think it's an area that we're very excited about fundamentally long term, and definitely looking to invest more there as well.
Awesome. I guess I can go next. So, in terms of areas that we're interested in, I think number one, like there's so many areas that you could sort of look into right now, and you mentioned again like already 4 or 5, and so the space has gotten so big where it's not really sort of investing into crypto, it's investing into companies, and crypto sort of is going to be the technology and economic layer that just spans across like so many different industries. And because of that, at Pantera, we've grown a pretty sizable team, both in terms of the investment side and also the portfolio services side. So we are starting to have a bit more sort of specialization. For instance, like, I started investing in 2014, and I know we've done some of these investments too, but like, focus on, how do you get into cryptocurrency? First on the retail side and institutional side, how do you make things secure, and maybe some of the early applications of cryptocurrency? And so focus on the US, but also expand it to other geographies, knowing that this is going to be global. We need liquidity in each of these different areas so that we can actually provide the ability to do on-ramps into each of these areas, and also cross-border payments and liquidity for other sort of applications like decentralized finance. And so my areas of expertise has really been around these local brokerages and exchanges, financial infrastructure in each of these different areas. And then it spanned a little bit into developer tooling. Me and Joey did Alchemy, but I think for us, we have other folks that are diving even deeper into developer tooling, decentralized finance, and then of course, like when NFTs and gaming started to come about, I started to dive a bit more into that side because, for me, like my background has been investing into consumer mobile and mobile applications before Pantera, so I have a little bit of experience there, and I just think that it's maybe higher risk but higher reward to go after consumers. So I think for me, like it's pretty fascinating. I like to be able to invest into things that I can try and be able to tell other people that I can try and understand a little bit more. I think the other thing to sort of think about too is, especially with like changing regulations, especially regulations between the US and Asia, I do think that we take a slightly different approach depending upon jurisdiction. So I think in the US and Europe, we focused a lot around infrastructure and middleware and financial infrastructure, but I think, I just came from Korea, and I feel like there's a lot of stuff around gaming, GameFi, sort of entertainment, and I think, in Hong Kong and Singapore, maybe a lot more around financial infrastructure, non-blockchain applications, so things around identity, DPIN, et cetera, and around payments. And then, of course, in Japan, I think stablecoins are very interesting. So I think for us, like, the most important thing is to really sort of dive into each jurisdiction, what makes sense on a regulatory side, make sure you have the right partners, and then, of course, be able to sort of help these companies scale.
Yeah, I think for us, we like DeFi a lot still. I mean, there was a whole panel on that before us, so we don't have to do too much. But
they're drinking the Kool-Aid already.
Yeah, the Kool-Aid. But I do think it's, you look at like the chart of stablecoins, which is like the enabling thing behind DeFi, and it's like the most promising, like most exciting chart in crypto still. It's still up and to the right. And there'll be more real-world assets, and that'll feed into DeFi, and it's a sort of positive, feedback loop. I would say I'm a little bit more bullish maybe than Joey on sort of the crypto AI intersection. I still think it's very early, but yeah, we were early investors in one sort of really early generative AI company called Jasper AI, which is sort of like enterprise-grade ChatGPT, and had nothing to do with crypto, but they're being used by a lot of crypto companies now, actually, and they have an NFT package and things like that. And I do think there's this exciting opportunity of like using DeFi and the sort of open, composable, transparent financial system and economic system that we've built in crypto as like an execution layer for AI agents. So like, today you go to ChatGPT and it's like a better version of Google. It organizes the world's information, but it also does stuff. Like it's your little servant, It's an AI agent. It writes your essays for you and helps you cheat on your homework and stuff. And then, but it can't do like economic stuff. Like it can't rebalance your portfolio. It can't pay your bills. It can't run your business for you. That's really hard. You have to integrate with like hundreds or thousands of different payment processors, and they're all banks and stuff. Or you could just like one click into DeFi. Everything's open API, and so that's very cool. I think like starting to get like AI agents that are like economically empowered is really, really cool. We'll see how long it takes, but it's sort of a brave new world that will be fun to live in, I think, at the very least.
Yeah, at Ethereal, I think we really try to think about what will drive adoption for the next cycle, and how do we sort of, be around 6 to 12 months ahead of market, because we're focused on being first check-in investors. So on the application side, we're pretty excited about payments now. I'm a bit biased because that's my background, but I do think that on the TPS side, we can actually provide a pretty good payments experience, and bringing payments on chain, like you're truly delivering a great user experience where it's 24/7, it's global by design, it's instant settlement. And I think now that everyone has coalesced around sort of stablecoin being like the sort of the currency that people use to make payments with on chain, like we can actually use that in the real world too. And rather than sort of bridging the gap, you're sort of just eliminating the gap between crypto and normal currencies, if you will. So whereas in Europe and also in Asia, where we think there's a lot of favorable regulation towards this, we're speaking to a lot of teams. Would love to talk to more. I think another topic that we are spending more time on is as more transactions and activity go on chain, I think privacy becomes even more important. And at the moment, given regulatory pressures and what's happened with Tornado Cash, it's not the most popular thing to be thinking about, but it's still super important because I think people aren't really realizing the cookie crumbs that they're leaving on chain that will actually compromise their own security and their own funds. Lastly, we also made an investment in EigenLayer. We co-led the seed, and we do think that's a platform that will unleash a lot of innovation in the middleware and dev tooling side. So EigenLayer is a restaking platform that allows new projects to utilize the economic security of Ethereum. When you don't really have to think about that, it sort of abstracts away a big focus area that teams spend a lot of time on, so they can actually focus on innovation. They'll be launching in Q4, and they have a lot of teams that are building on them. So, we're pumped to see what happens there. In general, I think we're all pretty curious on this panel what will drive the next sort of bull cycle. But as we've seen in previous cycles, crypto always finds a way.
So all four of you touched on DeFi, and I know all four of your funds invest in DeFi. So I'm curious in terms of what are the next unlocks for DeFi? What do you see there? Because it does seem like a lot of the projects that came to market over the past, say, 12, 24 months, they seem like marginal improvements on existing incumbents instead of the true kind of 0 to 1 unlocks that we saw back in, say, 2020. So what are the biggest areas that founders should be digging into for DeFi?
So I actually agree with the AI agent thing. I gave a talk about that at Consensus earlier this year, and I think that's actually an interesting area where DeFi will intersect a lot with, the next wave of DeFi will intersect there a lot. I think if you think about the problem set, as sort of Alex mentioned, you have these agents that are global. You don't necessarily know who the other person is. And if you think about crypto, the way it works is actually a feature here and not a bug. Crypto's terrible if you want to buy a coffee or buy a laptop. But if you're an AI and you don't know who your counterparty is, you really don't want chargebacks. You want push payments, not pull payments. And you want it to process pretty quickly. It makes no sense that I would have to use a text-to-speech model and a speech-to-text model to have my AI call my bank, send a wire transfer to some AI in Asia or Europe, and then trust that it settles and the person delivers the service and all this stuff. It doesn't make any sense. So I think that'll be a big 0 to 1 area. It's probably on a few-year horizon, 3 to 5 years versus next year. But I think that will be a really interesting one. I think the other thing is just sort of a resurgence in the existing kind of V1 old school DeFi stuff. If you look at Uniswap right now, it often does volume on par with Coinbase. And I think going into the next cycle, especially given a lot of the kind of regulatory developments that have happened, I think it'll see even more volume relative to centralized exchanges. So a lot of kind of that existing wave coming back. And then I think there's kind of a whole unexplored problem space that people just haven't built any companies around yet. Some of these are small, though. They're not 0 to 1. But one easy thing I'm still shocked no one's really built is a borrowing aggregator. You deposit ETH. And Paul and I have talked about this a million times. You deposit ETH, borrow, say, USDC, and it kind of continuously refinances you to get the best rate. There's nothing that does that. I think there's a lot of kind of still open things to build in DeFi.
Yeah, I agree with Joey. I mean, I know we're both huge fans of Uniswap, and I think for us, we've made some plays around decentralized derivatives. We do feel that institutions are going to be coming into the space, and we need those sort of primitives. I think we co-invested into a company recently around that too. Great entrepreneur that used to be at Pantera. But beyond that, I guess the other area that we've been digging a bit more into. So we're early investors in Circle, and Circle is the co-issuer of USDC, and I think that's probably the biggest sort of thing that's happening in DeFi right now, tokenizing the dollar and having it be interoperable within decentralized finance. What's interesting is, we invested into a company called Bitso, and they are facilitating cross-border payments. They're facilitating the on-ramp for Latin America to get into cryptocurrency, and the tokenized dollar has been huge. Again, people see the dollar as, starting off as a store of value, and then of course I think it'll be, very, very instrumental around sort of FX. And then I think more recently, especially with what's going on the global macro side, treasuries has been a great way to get yield in the US. And so we have companies like Ondo and M0, either providing sort of the picks and shovel infrastructure, that's what M0 is doing, to Ondo actually sort of going out there and providing a way for folks in the US to get access to tokenized treasuries and yields. And then, of course, like outside the US, kind of doing it through a stable coin. I think there's going to be more of those types of projects that are going to be doing so, hopefully in whatever way makes sense in terms of their jurisdiction from a regulatory standpoint. But again, if you're able to sort of bring these assets on chain, it could be stocks, and then be able to have the benefits of security, having the benefits of transparency, having the benefits of 24-hour trading, and then of course interoperability within sort of a larger open financial network, it becomes really exciting. So I think that's an area that we're keeping an eye on.
Yeah. Yeah, I do agree with your premise. It does seem like there's especially during the bull market, there was a DeFi app for every financial product that exists. Like if you go to Goldman Sachs and are like, what are all the financial products you trade? There was like an app for every one of them. And there maybe didn't need to be one for every single one, like every single type of option and all that. But I think the next unlock for DeFi is like core primitives and infrastructural innovations that just make every DeFi app 10x better. So yeah, I think privacy is one of those. Like obviously in every situation you want to have private transactions of your DeFi trading, and so you don't get front run and any other reason, right? There's never a reason where you don't want private transactions. I guess unless you're one of those people on Venmo who clicks the public levy. I don't know. I don't know if Venmo is that popular in Asia, but yeah, it's unless you're someone like that who wants everyone to see every payment you've made with your friends and every time you pay them back for something, then usually privacy is a good thing. And it just takes time. There were a lot of trade-offs you had to make, so it didn't make sense to have private smart contracting up until maybe in the next year or two. And then I think also just the real-world asset part that Paul brought up is so good. So today you could think of DeFi as this crazy playground, and that's also sort of a dark forest. It's very scary, it's very intimidating, but it works pretty well. It doesn't shut down randomly like it did sort of last crisis or last bear market. But it's just a really good jungle gym playground for crypto assets, trading, crazy ERC20s and stuff like that. But there's very few real world assets. So if we could just extend that and just add more real world assets, euros, T-bills, stocks, stuff like that. Obviously there's regulatory constraints. That's probably the biggest thing as opposed to big infrastructural leaps there. But once that happens, I think you can 10, 100x the size of. Why does everyone even hold Tether in USDC when it's 0% yield? I mean, every time the Fed raises rates, it's just even more ridiculous that we're holding these coins instead of giving up 5, 6% interest. But it's a testament to the fact that these things are actually really useful, but it will be even better. I mean, the amount of dollars in crypto will be much higher once these very simple things like yielding instruments come on chain, I think.
Yeah, I think this might be slightly controversial, but I do think that there's a bit of an identity crisis between DeFi products and protocols at the moment. So, you sort of look at the existing financial system. You have people who are building B2B products for banks, and then those asset managers who are then distributing the retail. And in crypto and DeFi, everything is just collapsed into one. So I kind of like to bifurcate the two when I think about it. And as we sort of mature in DeFi innovation, I think there might be a strong chance that we start looking more like how TradFi works. And not the perfect analogy, but for example, a lot of talk about intents, for example, and that sort of looks quite similar to RFQ systems, which all the banks operate on at the end of the day. So I do agree there's a lot of core primitives that still need to be built to actually make the experience faster, improve latency, and just make it more similar to what users are accustomed to. Otherwise, from adoption perspective, perspective, like, it's challenging to see how we'll get more users on chain. I think the same argument can be made for DeFi products. I agree with Joey. I'm really excited about borrowing. Especially right now, on-chain rates are kind of lower than real rates. And there are a lot of people who are unbanked. If you actually have people who want to keep their savings in crypto, want to get a payday loan in crypto, there's not really any good products that are available for it. And I don't think it's hugely different from what we're doing on chain. It's just not packaged in the right way where there's a right go-to-market distribution. So we're quite excited to see more teams building on that. I think it's a bit of a harder grind because it's not a pure software play, but one that's definitely pretty meaningful.
And Min, you mentioned that part of your investment mandate is to find projects that can bring on the next billion people. So I'm curious, and this question goes out to all of you as well. What are the main things that are preventing Web3 apps from having the same type of adoption that Web2 applications have, like WeChat and so on?
Taking a stab at it, I think usability is still not quite there. I love MetaMask. I love the MetaMask team. My mom's not going to use MetaMask at the end of the day. I think there's a lot of innovation on mobile, for example, and especially on the hardware side where we can sign transactions on mobile, and that will come soon. And that will definitely be a big unlock for a lot of users going forward. To some extent, I think there's just not that many apps at the moment that people will use on a day-to-day basis. Maybe you could see weekly MAUs, maybe even monthly. But I think if we have a proliferation of applications, if you believe that the industry is somewhat supply constrained, I think you will kind of solve that chicken or egg problem.
Yeah, I guess there's 3 areas that I can think of. I think number one, security. So, especially if you're going directly to a dApp without sort of an on-ramp, with some of the hacks that are going on, I think just kind of providing comfort around going into something and, feeling like you don't have to sort of be on watch. So I think we're going to sort of evolve in that category. I think that there's going to be just, more and more sort of types of audits that can be done, maybe even more decentralized type audits. I think there's going to be insurance products that provide a bit more sort of comfort around that. So I think that's something that people sort of have to sort of get over. I think another thing is around sort of accessibility. I think one of the things is really if mobile is so big, especially in a lot of different markets, then being able to sort of get on the Apple Store or being able to sort of, it seems like Android is probably an easier path to kind of get on and be able to sort of access, or maybe that's why Solana is creating their own phone, or there's other sort of folks that are trying to provide different ways to kind of get around it. But, mobile is going to be so big for this industry, and so, hopefully those platforms evolve, we evolve to be able to provide access to a lot more people through that medium. And I think the other thing that is going to be really important is really just the infrastructure to on-ramp folks into these decentralized applications in a regulated way. I know Joey was really involved with Wire, but again, if you are not able to onboard consumers and they drop off, more than 50% because they can't go through sort of KYC, AML, there's not good sort of risk analysis to kind of figure out whether, this is a good person to onboard or not, then you're not going to be able to get a lot of people in.
Anything to add, Joey or Min?
Yeah, I mean, I think I think there's based on what I've kind of seen in the private markets and what I'm aware companies are working on their roadmaps and stuff, I think a year from now, in my mind, there's really only 2 major barriers. Assuming you have a really good aggressive engineering team, there's really 2 major barriers to adoption. One is what Paul just mentioned, so the fiat on-ramp problem. It's really difficult to build a company there because you basically have to figure out how to let people pay, but also deal with the kind of fraud and chargeback risk from customers. And as you scale, you kind of keep thinking you've solved the problem, and then as soon as someone figures out some other attack vector, it's sort of a cat and mouse game that's really hard to solve. at scale. Coinbase has mostly solved it, but no one in the like direct to decentralized app fiat on-ramp space has solved it. Like MoonPay, you're paying 6-7%. That's not solving it. That's just adding in a fat margin to cover the fraud losses, right? So I'd love to fund somebody who actually has a solution to that problem. And then I think the second thing, which is actually a bigger issue, is just there's not enough people building apps. I would love to fund great founders at the application layer. There's just not that many people building apps. And so we'll love to see more of that, because I do think the infrastructure is at a point where, ignoring the fiat on-ramp problem, you could build something where it's really 0 to 1 and people go, wow, when they use your app today. Like, I don't think that was possible, when we were doing an Augur 6 or 7 years ago. But I think the tech stack today is at a point where that's actually feasible, if you're willing to kind of, integrate stuff which is sort of clunky today, but do it in a way that works pretty seamless for your users. I think it's actually possible.
Yeah. One thing I'll touch on is like enterprise adoption, which I think we always are focused on retail. We're individuals ourselves, right? But I think the biggest unlock for enterprises is actually the privacy story, and specifically differential privacy. So that's what like ZK Tech and homomorphic encryption are all about. It's like you could share some information, but not all to certain people, and you could have guarantees that that's the case, right? And so the early way I think we all thought about privacy was in a very like comprehensive way. Like, you're someone, you don't want anyone to know who you are or what you're doing in any way, right? And that's like the very, sort of libertarian, early ideological conception of privacy. But actually, there's a lot of entities out there who are called businesses that they are fine being like known, like who they are, but they just don't want certain things that they do to be known by everybody, right? So, if you're a business, how can you possibly put medical records on chain if it's open to everybody? How can you possibly have your supply chain logistics on chain if it's open to everybody? How could you even do like payroll and payments if like it's all the transactions of the amount of money, the salaries you're giving to your employees is like totally open for everybody, and you could game it for like on chain analysis or something, right? So that, I think, the differential privacy story is going to be really big for actually unlocking enterprise use cases, I think, in the next couple of years.
And I think we have time for one more question. So this question is for the founders out there. So recently, a founder reached out and asked, hey, I'm building this application. It's getting increasing users every month, but the market itself is shrinking, right? If you look across all the markets in crypto, NFT volumes are going down, DeFi volumes are going down. So what is your advice for founders out there that are building growing products in a shrinking market?
I mean, I think my view would be like, if you look at Peter, he has this thing in 0 to 1 where he says that if you can really kind of conquer a small market and get sort of monopoly scale market share in that small market, it tends to mean you have some sort of edge where you can then scale that into successively larger and larger markets. Versus it's much harder actually to go after a massive market. Like if, say, you were starting like a new ISP, that's very difficult. If you're Elon, you can do it with Starlink, but that's kind of an N of 1 situation. And so I think it's not necessarily a bad thing. Like if you have a small market and you're gaining market share in that market, you do need to figure out eventually how to expand into larger markets, whether that's like vertically or horizontally. But I would say, one, like I wouldn't be discredited by it necessarily as a founder. And then two, I also think like a lot of the drawdown and crypto stuff I think is temporary, right? Like my personal view is that's gonna, come back over the next few years. So you could be both gaining market share in a market that today is shrinking, but in 2 years from now will actually be much larger. So that's sort of my view there.
Yeah, I'm gonna piggyback off of what Joey mentioned, but I guess expand a little bit. So yeah, I mean, I guess 2 great examples of, again, starting off in one particular area that just makes a lot of sense. There's just like product market fit and expansion would be, one, Alchemy, starting off with nodes and then expanding over to sort of developer APIs and infrastructure. And another company that we invested into really early on, around staking. Everyone was like, oh my gosh, like that's such a small market. Why go into it? But I think once you are able to sort of create a beachhead and a brand around staking, then of course either the staking market evolves, where again, like, there's more proof of stake protocols or liquid staking, things like that, or you can even go direct to consumer and offer, other sort of products, or even going over to institutions. So I think that's one way to sort of, think about, just kind of starting off in one area that just makes a lot of sense, expanding the product line. I think another way is really around geography. So if you start off in one area that really just kind of resonates with that geography, and then figuring out, I have product market fit, find similar geographies that make a lot of sense, or maybe even around a certain region. Like, let's just say you start off in, like, we invest into, like, the leading brokerage in South Africa. They understand that environment. They can expand to other parts of Africa. And I think the last thing that I'll mention is around sort of go-to-market in general. So right now, I mean, consumers are a bit hesitant to speculate or just kind of get exposure to crypto, potentially. I think it's a great time to be building, though, to kind of set yourself up for the next bull market where consumers will be a little more comfortable. But going after channel partners, B to B to C, if you have a product that you think is really compelling to the end consumer, why don't you go through a Coinbase, similar to what kind of Optimism did with Base, but like go through someone that actually has a distribution, try to see if that idea has product market fit, and then sort of take that and go directly to consumers afterwards.
Yeah. I do think this is actually a really tough question, because our belief is like there are these like infrastructure unlocks that will, like, that once they happen, within a few months, they'll 10x or 100x the size of the market, but then not until then, privacy, real-world assets, whatever. So yeah, it's really tough if you're a founder in one of these pre-unlock markets. And because the Peter Thiel line is like, you go into a small market that will eventually grow, or you like move into other markets because it's all growing the pie. So what if you're in a market that's just shrinking for a year or two or multiple? Yeah, I don't know. It's really tough. Like, there are some like famous DeFi founders, including several who are on the last panel, who kind of like almost worked part-time on their projects or took time off like after starting it for like 1 to 2 years. And which is something that in Silicon Valley lore of just like work nonstop all the time, you would never do. But it was totally the right move. They needed to like pay rent. They had other jobs, And sometimes you have to do that in crypto. Or you just have to be really long-term oriented and okay waiting years and years and really understanding your customers and really building market share and making sure your users love you and love it. But it feels very incremental in the time, right? And that's tough. It's a really hard thing to do. It's not for every founder. You could also just go start an infrastructure company, but it's like, I don't know. I don't think it's necessarily Uniswap's job to go launch other stablecoins. They just have to wait until there are more stablecoins and so forth. So yeah, not the easiest thing to do, but it might be there might be some waiting to do, right?
Yeah, I think, echo what everyone said. And I think this is a moment where you really think about, survive to thrive, basically. People just hunkering down in bear markets and building, being close to your users, iterating as much as possible, trying to find cheap and economical growth hacks wherever possible, just so you ensure that you're actually around when the market does return. I do worry that there are a bunch of teams that are just trying to squeeze growth too much at the moment, and they might not make it to the next cycle, which would be such a shame because a lot of them are building amazing products. I think this market is also probably not the market to be building derivative products. Like, there's just not a lot of funding for it, is my sense. So if you're trying to build a better Uniswap or a better Aave, you need to have a really compelling reason as to why in sort of 12 to 18 months, you're really poised to gain market share when the market comes back because your product is so uniquely special and differentiated. Aside from that, I think really it's just when the bull market comes back and everything's crazy again, we might miss these times. So focus on building.
Definitely. I think that's a great note to wrap us up on. So thank you so much to all the panelists for coming, and thanks for coming out, guys.